Hello, welcome to our monthly performance monitor. My name is Barney Hawkins, Investment Director at True Potential. As we look back over the year so far, investors have experienced something not seen for many years, an increase in volatility. Markets around the world have eased back on concerns around the prospect of higher interest rates and fears that the charging of import tariffs may escalate into a fully blown trade war between the US and China. Although those fears are valid, it has to be remembered that it's in the interests of both countries to come to an agreement, and on balance we think it more likely that a deal will be done that satisfies both the US and China. Our managers too are generally constructive on the overall growth picture, but are conscious that growth is slowing from what has been an exceptionally high level. Looking forward, central bank policy is still very much in focus. US interest rates are at levels geared for 10% unemployment, not the low levels of 4% we're currently seeing. However, investors have come to terms with the prospect of higher interest rates, which is positive, and reduces the likelihood of market turbulence as interest rates slowly revert to more normal levels. In the short term, President Trump's introduction of tax cuts at this stage of the economic cycle may be inflationary and may require higher interest rates. However, over the longer term, demographics, globalization and technical innovation should serve to keep a lid on any more enduring inflation threat. At an asset class level, our choices show a preference for funds with a greater emphasis on equities. The technology sector has been very much in the news, with stocks such as Facebook struggling as regulation and data privacy laws are questioned. But with corporate earnings coming in generally at record levels, stocks are now on much more sustainable valuations. Momentum in markets is not so strong, and there is a feeling that we're at something of an inflection point, with a change in leadership likely in both asset class and style performance. Growth as a style has performed well, but there is evidence that this is slowing, and as investors reevaluate the financial landscape, our value managers are finding opportunities in equities that have been out of favor in more defensive sectors such as utilities and telecoms. Whether this is the start of a new leadership remains up for debate, but some of our managers are definitely putting more emphasis on value-based opportunities. In conclusion, there are clearly risks out there, and diversification is therefore key as we navigate through differing market conditions. Our managers have the ability to invest in different countries, currencies and asset classes, and these will all help to mitigate risk for your investments. The True Potential portfolios take this a step further, investing in differing manager styles, something unique in the marketplace and a way to help guide investors through a changing market environment. Thanks for listening, and we'll see you again next month.